Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. We begin today with geopolitical risk. Clearly, they are not in short supply. We have the situation in Venezuela and how oil markets have been impacted. Earlier, U.S. forces seized a Russian-flagged oil tanker in the North Atlantic after a weeks-long pursuit across the Atlantic Ocean. And a second vessel was apprehended near the Caribbean Sea. And then there's Greenland, and President Trump insisting the U.S. needs the island for security reasons, since Russia and China have been increasing military activities nearby. And let's not forget Beijing turning up the heat on Tokyo. Now, the Chinese have banned all so-called dual-use shipments for military use. Let's bring in Bloomberg's Paul Dobson. He is executive editor for Asia Markets. Paul joins from our studios in Singapore. I'd like to begin, Paul, by looking at the Chinese threat on tighter controls for the exports of rare earths to Japan. Clearly, this would be a major negative for the Japanese auto sector.
Yeah, hi there, Doug. It really depends how China chooses to use these measures. But yes, there are certainly parts of the Japanese supply chain that are pretty heavily exposed to imports from China and make use of them. I think that the jury is out on what China actually intends to do here. It's deliberately been quite opaque, I think, in terms of what the pronouncement is and what the measures might look like. And that gives Japan some room to try to, de-escalate the situation if it wants to. That's not what we've seen so far from Japan. They seem to have dug in quite hard as well. And there are countermeasures that Japan could take, by the way, that would also be quite harmful for the Chinese supply chains. So it's not out of the realms of possibility that this could continue to escalate, and at least in the short term, that would presumably be quite a negative for both nations' markets. But on the other hand, there is definitely some open ground for an off-ramp to be found if they want to find that and look for it.
We had President Trump saying today that he will request an increase in the U.S. military budget by $500 million. He went on to say the increase is necessary in very troubled and dangerous times to build a, in his words, dream military. But I'm wondering whether or not we may see kind of commensurate moves on the part of certain jurisdictions in Asia to kind of respond in kind. Is that possible? And could that be reflected in market prices for some defense contractors?
Yeah, and already has been all the way through last year. Some of the defense names in Korea, for example, and also in Japan have really been performing exceptionally strongly. And, for the first time, really, Japan is sort of really increasing its budget spend on defense. And I'm sure that you will see more of that everywhere. I think, even countries that haven't really had to think about it before can see that their airports might suddenly be exposed and will need to put different defensive measures in place as a result. So those defense companies do look like they're in, a good spot in terms of their earnings potential. Not that it's a particularly nice thing to be talking about, but definitely we have that. And also the scope for that to drive more innovation and more creativity, and therefore for new products to emerge that would be also interesting for investors.
I have to ask you about the Samsung results, which seem to beat estimates by a wide margin, both in terms of operating profit and revenue. What are we seeing in terms of what the analyst community is saying and how the market is responding?
I'm still waiting for more details on it, but the initial market reaction was actually a little bit negative, despite the beats on the top line that were announced. But Samsung has had a real roaring start to this year. We had the CEO saying a few days ago, Samsung is back. That was the quote, and investors seemed to like that and piled onto it. I think it was up 7 or 8% in a single day. And this is like one of the biggest companies, not just in Korea's index, but in the Asia-wide index as well. So it really matters a great deal. So the fact that it's already had that huge gain already this year on top of big gains last year as well does mean that the bar is very high in order to impress investors at the current valuations and for the rally to continue to go higher. That said, I do think, the memory chip pricing has definitely been lifting extremely aggressive recently, and the technology companies in general across North Asia are still very much in favor, just like you see with the Mag 7 in the US.
So we're in the first full trading week of the new year, and we have a flood of global corporate bond issuance happening this week. Is that a surprise to you at all?
Not a surprise. It's always busiest at the start of the new year, but it's hefty. It's a record. And what I think is perhaps interesting, if not hugely surprising, is the fact that the demand is just getting taken, all of this supply is getting taken down by the demand with very few problems at all. New issuance concessions seem extremely low. And so it tells you that there's really hunger out there for corporate bond issuance. People want that income. They want the steady revenue that they can gain. They don't see any particularly big credit worries on the horizon. And that's good news for the global economy, right? If funding conditions are loose or easy, companies can raise cash, can put it to work, including the big technology companies. We saw Broadcom in the US already issuing as well. Then that speaks to, money flowing around the economy that can help to continue to fuel what's looking like a pretty decent global growth backdrop at the moment.
What are you hearing about the overall outlook for Asian equity markets in the year ahead?
I'm hearing lots of positive commentary about emerging markets and about Asia as well. So, for example, yesterday I was reading a note from Goldman Sachs, and they were talking about all these different prongs that they see that are favorable for. They were singling out North Asia and India as their picks, but they were saying, first of all, you have the technology story, the AI story, and that is still something that has plenty of momentum. Yes, there are valuation concerns, but there are also all these other companies across the supply chain that are emerging that look like they have plenty of potential. So they like that. They like the favorable economic and macro environment that I was just talking about. Don't forget, okay, Trump is raising geopolitical risk, but he's also keeping down oil prices, and that's also an important input into global funding conditions. And then you have the idea that interest rates are going to come lower again this year, most likely. In any case, if you look at the Fed dot plot, for example, they're pricing it, or the policymakers are telling us they're planning to cut interest rates more, maybe not immediately, but down the path, and that would allow for Asian central banks also to loosen monetary policy if needs be. And then they talk about on the political side or the fiscal side, governments also have the back of the companies. We talked about defense spending. It's not just that in Japan. There's more stimulus measures. In China, there's going to be efforts to continue to fuel growth as well. So all of that adds up to what the Goldman Sachs analysts were saying, and what a lot of other names that I've been talking to over the past few days are saying is a very positive overall backdrop for Asian equities.
So, as you know, this week we have two key events for markets stateside. We have the employment report for December, that's due on Friday, and the Supreme Court may, and I stress may, issue an opinion on the legality of President Trump's global tariffs. Yeah. What is the conversation happening in Asia around the tariff story and the possibility that these tariffs may be illegal?
Yeah, it's a great question, and one that we have to ask all of the people that we're speaking to as well. But I do think that actually the consensus is that for the most part, across Asia, the trade deals that are already in place and have been agreed with Trump are most likely accepted now, and so therefore will stay in place. I guess people would expect that even if the tariffs as they are now are outlawed by the high courts, in time the Trump administration will find a different way to put exactly the same tariffs in place. And so if you've already got your trade deal and you think that's probably as good as you're going to get in any case, then go along with it rather than rocking the boat seems to be the consensus. And as I said, exports are holding up and the economy is looking reasonably strong for all that we have that. I do think that it will create volatility. I do think that Monday morning would be a rocky ride for us if we do get a repeal of the tariffs, and if we get some very surprising payrolls number as well. That could add to the equation. And of course, Asia is always the first to react. So we'll be here nice and early, looking forwards to what we get on Monday morning. All
right. We look forward to it. Paul, thank you so very much. Bloomberg's Paul Dobson. He is executive editor for Asia Markets, joining from Singapore here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. certainly was a lot more news from the oil patch in the last session. The Trump administration said the U.S. will seek to control Venezuelan oil sales indefinitely. U.S. Energy Secretary Chris Wright told a conference sponsored by Goldman Sachs sales would initially come from crude held in storage and later from fresh Venezuelan oil production. Now, the White House indicated the U.S. has already begun marketing this crude oil. And at the same time, we are being told that Chevron is in talks with the U.S. on expanding its license in Venezuela. We got reaction from Vandana Hari. She is founder and CEO of Vanda Insights. She spoke to Bloomberg TV host Paul Allen and Avril Hong. And the conversation began with Vandana being asked about her outlook for oil.
There's a few time-related narratives around the oil market at the moment. I mean, in the short term, we're back pretty much to where we were before the U.S. operation in Venezuela. But longer term, I mean, Venezuela supplies so little at the moment, but could supply so much. But with oil prices so depressed right now, how viable is more investment in Venezuela?
Good morning, Paul. So amongst all the hurdles that are stacked up for Trump's ambition of U.S. companies tapping the 300-odd billion barrels of Venezuelan reserves, you just mentioned yet another one, which is the outlook for oil prices. And again, here we are not just talking about 26 or 27 for that matter, but longer term, because let us remember, tapping these reserves and rehabilitating the overground infrastructure that is needed to support the movement of that oil is going to take years, if not decades. So assuming that global oil demand is going to continue, growth is going to continue decelerating, which means oil prices are probably going to continue softening. You know, we may not return to $80 and $90 a barrel kind of range on a sustained basis. That will be yet another question amongst everything else, which is political stability for oil companies before deciding to make those kind of investments of billions of dollars in Venezuela.
Yeah, we do need to talk about the everything else as well, because as you mentioned, there are so many factors here. If you were an oil major like a Chevron or Conoco or Exxon, you'd have a lot of questions around security, future political stability, and of course Venezuela has form when it comes to nationalizing oil assets.
Yeah, not only that, Paul, but also I couldn't look to anybody to authoritatively be able to tell me or guarantee that kind of security and stability. So I could be talking to, of course, President Trump and the core team that is overseeing the transition in Venezuela. I could talk to the Energy Secretary Chris Wright, but really, who has the crystal ball today to be able to guarantee me as a U.S. major that this is exactly how things are going to play out in Caracas, how long the transition will take, who will be the new leader, how will the new government operate, how will it operate and under whose influence after Trump is gone from the White House, right? So all of these questions are definitely going to be swirling in the minds of the executives of the oil companies. And then again, let us not forget, it's billions of dollars. It's not a small investment. So again, I think we should differentiate here. If talking about just, for instance, Chevron, which is already in the country, to go in and maybe do a little bit of, modest investments and just get some things back in order to be able to exploit the current maximum production potential, that's one thing. But saying that, putting tens of billions of dollars at a minimum to tap those 300 billion barrels of reserves is absolutely another question.
Okay, so that's on the U.S. side of things. Also worth remembering, as you well know, Vanda, how China was that big market for Venezuelan crude. Where does this leave it in terms of China procuring supplies of energy?
Yeah, so I think the rerouting and reshuffling of oil flows is probably going to be a key theme in the medium term. And one of the biggest affected parties as a result of that is definitely going to be China. So as we know, China was taking the lion's share of Venezuelan crude exports, close to 600,000 to 700,000 barrels per day at heavily discounted prices. So this was benefiting the small independent independent players in China, often known as teapots, who operate on very thin margins. They are very reliant on discounted crude from places like Venezuela, Iran, and more lately Russia as well. They are going to be on the losing side. I mean, even in the near term, we can already see the U.S. is prohibiting or blocking ships from taking oil to China. So China has already been deprived of that discounted oil that it has depended on for the past at least 5 to 6 years since the first Trump term's sanctions on Venezuela. To some extent, Canada will be impacted as well if the U.S. ends up taking a lot of the Venezuelan crude, which is my base case, at least for the foreseeable future. Canadian crude will need to be backed out and potentially seek home in Asia, again, where China is the main buyer probably, but then for China, does it get the extra Canadian crude at the same price as the discounted Venezuelan? Probably not. So, the Chinese teapot refiners especially are looking at very further thinning of their margins.
At the same time, there is a sense that what's happened in Venezuela is setting a pretty dangerous precedent, especially if the U.S. is going after natural resources in this manner. What is your sense of where it might potentially set its sights next?
Anybody's guess, right? Though there's, of course, a couple of names which are being discussed more prominently, Greenland being one, that will hopefully not rattle the oil markets, but the other one is Iran. Not the same kind of intentions, but we do know, we have seen in the past few weeks especially, Trump amp up his rhetoric against the government in Tehran, and that is a different ball game altogether. So if we see renewed tensions in the Gulf, in the Middle East between Israel and US on the one side and Iran on the other side, we could be in for a very, very geopolitically driven, risk premium driven oil markets going into 2026.
That was Vandana Hari, founder and CEO of Vanda Insights, speaking with Bloomberg TV host Paul Allen and Avril Hong here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.